So I wanted to jump in here and first take a look at the markets, and I think there are some opportunities for trading today in the market. Let's take a quick look at the S&P. I think that today is kind of an important day. Today into tomorrow, as far as the market is concerned, you have this bull flag pattern where they call it a flag pattern because you basically have the flag pole, which is the strong upward move in this case, and then a flag pattern, which is a consolidation pattern off of that. And you can see how it kind of looks like a flag waving in the wind. This resolution could go either way. Now, obviously, it's a bullish pattern. It's called a bull flag because it's happening in an upward trend. So the fact that we're in an uptrend means that the resolution of this is more likely to be up than down. That would be the anticipation. But it's what we call a moving day or a moving period where you either get the breakout, maybe it's tomorrow, maybe today's just going to be kind of quiet and stall out here. That's certainly possible. But the basic idea is it's make or break time. Either we break sharply higher, which is very bullish, or you turn sharply lower and it's another failure at resistance. And if we do that, then you can get that slide at least back to the lower end of the trading range, and quite possibly even a deeper pullback back to the prior breakout points and so forth. So I think that the next 40, 50 S&P points, the next 400, 500 Dow points are going to really be dictated by whether we make or break at this level. Let's turn to the Dow Jones Industrial Average, and if you look at the Dow, put in both symbols together. If we look at the Dow chart, pretty much identical, very similar. It's even kind of hard to tell that it changed, and that's typical. The S&P and the Dow trade very, very similarly, but there's a number that everybody's watching, that 20,000 number. You can see it right up there. That's a big psychological resistance zone. So notice once again, the big acceleration. Now we've been in a consolidating pattern, and it's make or break time. Either we make with a nice move above 20,000, or we break down, we fail, and we not only trade to the lower end of the range, but quite possibly, quite probably even lower to kind of shake some people out. And I think the next day or two, today into tomorrow, becomes very important for the next little while as far as where equities go and how stocks trade. So we're watching this pretty closely. Now, as we look at potential trading opportunities, I like to use a scan, and this particular scan, as we kind of go through things, is our daily bullish and bearish Bollinger Band scan. Now, the Bollinger Bands are something that were developed by John Bollinger back in the 80s. They're based on statistics, standard deviation, mean reversion. If you look at a Bollinger Band, it's basically plotted against a 20-period moving average. So you have a 20-day SMA, which might be going like this in an uptrend. And then the Bollinger Bands are two standard deviations above and below. So you have a line that's two standard deviations above, and you have a Bollinger Band that is two standard deviations below, and it'll kind of look like that. And then we like to also plot with it the 50-day moving average. Now, the 50-day moving average is not part of kind of what we're focused on as far as the signal and whatnot. So you've got the 20 period right here, and you've got the 50 period right here. But what we're using the 50-day for is to tell us where the trend is. So it's pretty simple. If the price of the stock is above the 50 period moving average, and I'll type it in, that is a bullish trend. If the stock is below the 50 period MA, that is a bearish trend. Pretty simple, straightforward, right? So if the stock is above the 50, we're looking to be buyers. But how do we look to buy? Well, the tricky thing about Bollinger Bands is usually you'll be on the wrong side of the band. So in a strong uptrend, you'll be hitting the upper band often. And that's not really a signal. That just means, hey, we're strong, we're pushing higher, and so forth. But the lesser seen signal will be to come back to the lower band. Every once in a while, let's say this Bollinger Band keeps coming up, you'll get this little deeper pullback where the price action actually comes all the way back and touches the lower band and sets up there. Now that's the signal that's less often seen. In other words, a stock in an uptrend will hit the upper band often, no signal. We don't short an uptrend. We're not trying to predict trend changes and all of that. What we're trying to do is get a signal that works with the trend, that works in unison, in harmony with the trend. So stock hitting the lower band but still in an uptrend is A+. It is a buying opportunity. It's a great signal. Why? The stock is 2 standard deviations below its average, so it's oversold, but it's above its 50-day moving average. It's still in a strong upward trend, and that normally creates an excellent buying opportunity in anticipation of the next surge, the next move higher. So what our scan does is literally goes out and scans through the thousands of stocks and finds just those that are meeting this criteria. So this is something that I myself, Corey Halliday, have developed. This is a indicator that I've used. This is a signal that I've used. This is proprietary to me. All of the scan, all of the criteria is stuff that I've developed personally. So this is not found anywhere else. This is the gospel of Corey as far as trading with the trend, but using our Bollinger Band signal. So as I go into our scans and do those, look at this scan. As we do a search for the bullish daily, well, it gave us an error, which I'm not sure why. Let me go back a day. So here we go. Here were the stocks that met the criteria yesterday. I'm going to sort them by volume, and what we're going to be looking for are great setups. But what you're going to notice is all of the stocks that we pull up on these charts, guess where they're going to be? They're going to be at or above the 50-period moving average, but down near the lower Bollinger Band. So see why CSX popped up on the scan? See how it hit that lower Bollinger Band, but it was above its 50-period moving average? Pretty nice bullish setup. McDonald's, down at the lower band, but above the 50-period moving average. Potential buy setup there. UNP, the next one on the list, down at the lower band, above the 50. So I'm just going to scan through these and see if anything really stands out. Aetna looks pretty good, starting to elevate. This is a nice deep correction. Potential setup. Yum Brands, of course, you'll know Yum Brands is the KFC, Taco Bell, what else? Pizza Hut, that company. Anyway, again, kind of a bull flag type pattern, a corrective pattern back to the lower band above the 50. Looks pretty good for an upward move. And this is one of those that may even look like a pattern within a pattern. One could argue that with this resistance up here, that this is kind of a cup and handle type of setup as well. So up and out, potential setup there. Let's keep looking here. Apache. Apache. Let me see if I can get this to work. Oh, there we go. Apache down at the lower band, above the 50 period. Fast. Down at the lower band, above the 50. Not a great look. Big, ugly red candle. Last but not least, CME down at the lower band, above the 50 period, and trying to elevate, trying to push towards upward prices. So anyway, big long list of potential candidates here that we could look at a little more closely. A couple that stood out to me, I liked Aetna. I thought that was a nice setup for a potential upside move. It's already jumped up to the 20 period, but I think could go a bit further from here. Apache, that one didn't look great. What was the other? McDonald's had the hammer candle down at the lower Bollinger Band, so some potential setups there. I really think, something like Aetna, it's in the healthcare space, that's been an underperforming sector, but you can see how it meets the criteria. You're above the 50, but you're down at that lower band and it's trying to bounce here. As we look at Aetna, a couple of potential targets. Number one, you could go to the upper Bollinger Band, which is around 130. So first price target would be in the 130 per share range. Second target would be the prior swing high, which is up here around 135, 136, right up in that range. And those are two potential price targets, I think, that are very realistic in terms of where Aetna could trade to the upside. Your downside pretty limited in that we would stop out below the lows here. So if it breaks those lows, the trade is done. The chart setup is no longer bullish. It's got problems. But if we move and accelerate, it's probably going to 130 first stop and ultimately could go back up and challenge those prior highs. I think playing it fairly conservative, a move towards 130, stabilization, that sort of thing, makes good sense. So I've got no problems with that. We're going to look at that a little more closely. Let's go to our NASDAQ earnings calendar. We always check for earnings dates with stocks that we're going to trade. So I'm going to do a company search down here and type in Aetna. We know that we're heading into earnings season. Earnings season is January, and then 3 months later, April. It's typically that first part of each quarter. So notice Aetna reports on January 31st. If you put on a trade that lasts beyond that, you'd be trading through that earnings date. There's a couple of ways we could potentially trade this, but I don't mind the idea of just your standard call spread. If we're looking at this for opportunity, we look at something like Aetna. You could buy an expiration that goes through that. I think we could buy an expiration that finishes before earnings. So earnings are on the 31st. If we look at the January 27th weeklies, these are the end of the month. These are considered weekly options. If we look at Aetna again, I think in terms of risk to reward, we're probably targeting a move up towards about 130. That's a reasonable price target. So from 125.62 to 130, let's look at this a little more closely. You're at about 550 for the ones you're buying at 125, and you're collecting about 350. So probably paying about 550 minus 350, you're probably paying about $2 for that $5 spread. And paying $2 for that $5 spread gives you a $2 of risk, $3 of reward potential trade. You can see there's a good bit of volatility and expectation for some movement here. I don't mind that as a risk to reward trade, risking 2 to make 3 type of position. I think a move towards 130 certainly could be in the offering. I'm going to hold off a little bit. I want to check a couple other things as far as actually pulling the trigger on that, but we may send out an alert on this, and there's even the possibility. Here's XLV, which is the sector ETF, broke above these little swing highs but kind of stalled underneath that 200-day moving average. I want to look a little more closely at the HMO stocks in that industry. Aetna fits in that group. I have a little bit of mixed feelings about how much upside we can target. I think there may be even opportunities to sell a put spread. So we'll send notification if we actually pull the trigger on one of these. But anyway, I think Aetna or one of those stocks could be the trade of the day. So we'll do a little bit more looking, make sure we like it, and if we do, we'll jump on it. All right, now let me look at a couple of updates. Alibaba, BABA. Nice spike to the upside. We're in it. We own calls. Spiked up to the upper band, the prior swing high. That's an area of concern. In fact, if we fail here, if we kind of fall off, that would meet the bearish Bollinger Band criteria of being below the 50 and hitting the upper band. So we could have to consider potentially taking profits on that trade. ITUB, another position we have on. Stock position, it's running upward nicely. We're making money. Not too much to add there. Chesapeake, or not Chesapeake, Checkpoint. We have a trade where we want it to stay around 85. That's right where it is. We're in pretty good shape there. And General Electric, last but not least, we want it to hang around 32, and it's right around that 32 mark. So in butterflies, you want it to hang around your peg, hang around the level, the body of the butterfly, as they call it, and we're doing that right now. So pretty good shape there as well. We'll potentially send out alerts, updates, and some things that way, but everything's running pretty smoothly at this point in time. Thanks again, everyone. Have a great rest of your day. We'll see you next time. Goodbye.